Oh, Canada, our stocks aren't that great. It's hard to predict what will perform better than things in the States. So today, we're going to review first the top 5 Canadian stocks, and then we're going to review the top 5 US stocks. So let's jump into this, guys, starting with a throwback. This one started to be one of the best performing stocks this year and then turned right around. And I promise you, this is the only stock that isn't doing well right now, but it was, and that was Canopy Growth Corp. And this was I can't say that. This was how about you finish my words for me? And I'm not going to finish it so the algorithm doesn't screw me, but you probably know what I'm talking about. This company from the beginning of the year to mid-year hit a total rate of return there of 57.36%, but from there on in, we took a tanking, boys, to a 61% down from that mid-year. This almost made one of the best performing stocks, a $9 billion market cap. If you do not know this company, my goodness, you are out of the loop. This company is that, cultivation kind of company, guys, and it was making record returns last year, but looked like it was going to be this year too, but maybe not. So now I want to show you the company that supplies them. Well, you think it's the government? No, it's the Shopify platform that sells Canopy's products for them. And Shopify has been on a record tear lately, as we can see, guys, from the beginning of the year to all-time highs. We hit pretty much, a 219% return, taking this company to a $46 billion market cap, and it's only down like a very tiny, how far are we down from all-time highs here? From now, we're down 23.81%. If you don't know what Shopify does, you probably already use them. They just do e-commerce online platforms, really cheap, easy way to get access to credit cards and selling things and moving around online. I'm sure you've heard of drop shipping and all that fun jazz. So that all kind of takes place through here and a few other websites as well. But this is the dominating one, and it's kind of interesting that it is a Canadian company on top of that. Now, on the whole other side of the spectrum here, guys, I'm sorry, I'm being like loosey-goosey today, but we're talking Village Farm International. Now, Village Farm International is like the Warren Buffett kind of investing, where you invest into farmland, greenhouse growing of the vegetables. And we're going to take a look at their website, but really quickly, this stock year to date is up 97.9%. Very healthy rate of return this year, and we can see they literally just grow the vegetables, which is pretty cool, guys. It's kind of neat that you can invest into this, something that I might consider looking at, maybe something you should look at if you don't have any farm kind of real estate attached to your portfolio. But the fun thing about this is it's not a REIT, so you kind of get the benefits of having a kind of a normal company that would be farmland and vegetables at the same time. Though it is not profitable, it's only $546 million market cap, small company, you have to do your homework there. But let's move into our next one, which is, of course, the gold. If you're a gold bug, if you like gold, I think we'll have a little bit sitting back here, a little bit of silver going on there. But Kirkland Lake Gold, we knew some of the gold companies would be exploding this year. As we can see, gold kind of goes on a tear, and this is a pretty big gold company to be worth $12.38 billion. Pretty high PE of 34.94. It is profitable, and this year alone, this company is just on a record tear, being up 125% as I whack my PC. If we take a look at their company here, guys, it's just typically one of these high grade, low cost gold mines, as they say in Australia. So you're kind of getting exposure outside of Canada while owning a Canadian form of a stock, I'm going to say. It's kind of confusing, but we know the gold sector. We kind of get that. We get the jiffy lube of all that, don't we? I cannot see with my glasses on here. So moving on. Oh, this is my favorite this year. So this is the 5th and final Canadian stock, guys, and one of the best, hands down, in my personal opinion, is Air Canada. Unbelievable growth in Air Canada this year, going from $23 with a rate of return of 100% in literally just this past year alone. Absolutely staggering, guys. And if we look at the full chart, this company has just been unbelievable for performance and growth, even though we don't get a dividend yield, which is kind of unfortunate. It's the only thing that keeps me from buying it. But man, if you own this stock, you gotta let me know in the comment section below, because ooh, baby. And if you don't know what Air Canada does, I mean, it's kind of self-explanatory. Oop, I went into their website, but they want me to confirm. Anyways, you book your air flights on here, guys. Do your vacations. I don't fly Air Canada that much for somebody that lives in Canada. We usually take WestJet. We always end up taking something else for some reason. Air Canada doesn't come up very often when we're searching flights. All right, guys, moving into the top 5 America stocks. And these ones, in my opinion, are way easier to find, because you think in Canada you'd get like oil sector and banks performing the best, but they're these really obscure, risky, high kind of growth companies. In the US, it's a little bit more easy to understand, and I'm going to show you why, because basically it's technology these days, right? So we're going to be looking at a lot of tech companies, starting with basically Global Payments. So kind of considered tech, but it's basically just a big payment interact kind of system. And this company, we all know, like Visa, has just been performing insanely well, being up 49% on the year to date. And these wonderful interact companies are basically like the idea of printing money. Like I talked about before, there's a company called ICE, which is the International Continental Exchange. They own like the New York Stock Exchange and stuff. You can buy into them, which is the equivalent of printing money as well. So if you're looking into payment services, this is one of the better performers this year. And this is another interesting twist, is we take a look into a company called X-Ray, is the ticker symbol, literally X-Ray, and it's Dentsply, I don't even know, Dentsply, if I'm even saying that right, Sirona Inc., hard thing to pronounce. And this company, obviously, I mean, we can kind of figure out what it deals with. It's up a whopping 58% this year, oh my goodness. And welcome to Dentsply Sirona. I wish they made something a little easier to say, because my goodness, guys, I can't pronounce that. I'm going to presume that this company deals with some extended version of X-Ray, obviously a dentist company, but they use special tools. Really fascinating company maybe to look into. This is you guys should I hope you're enjoying this, man. This is like a really diverse amount of companies we're taking a look at today. So we're going to look at a normal one. This is one that I personally bought, so I'm a little biased here, guys. I'm sorry if I'm a little biased, but we all know, of course, the Microsoft, which is actually outperforming Apple this year, which is quite incredible to think. And this stock is up a whopping 39% roughly at its all-time highs this year, from the beginning of this year, pretty much, right? Like, it's mind-blowing. My average buy on this, I think, is $103 because they got into cloud computing. Microsoft basically owns gaming right now and cloud computing, and they're really competing with Amazon. That has taken them into a whole nother field, putting them at the top of the stock market. They basically sit at the top of the S&P 500, is the largest company in the world. What a wonderful buy. And I'd still consider buying more. I still think it's a fairly decent company at the price that it trades at as well. Be nice to see a bigger dip for you long-term investors like myself, you passive income investors. So moving on to the next one, as we all know, these technology companies, guys, AMD. AMD has been just unbelievable this year. If we look at the one-year chart alone, guys, at all-time highs, it was sitting at almost a 95+% return. But this company has extreme volatility to it. As we can see in the past, it usually can make big spikes followed by 30 to 40% drops. So this one's been kind of interesting to watch, even though it's more stable than something like an NVIDIA stock. So it's quite neat to see these chip makers. The volatility comes with these crazy high market caps. Like, look at the PE on this. 98 PE with a $35 billion market cap, and the volatility is just staggering. Crazy stuff there, guys. So let's move into the last few that we got. What do we got left here? What do we got left? Let's take a look. Well, we already talked about the AMD, which obviously works with the Microsoft, and they do all kinds of weird stuff. So we know AMD, they're a chip maker, like I just said, guys, but we want to move into our final company here. Our final company, which, like I said, it's hard to see with these glasses on, eh? But my final company is a Mexican grow company. I'm sure you've heard of when it got all the way back to dealing with those food poisoning scares. This company went through a lot of volatility, but after that volatility passed, news got better. This company hit a 82% return at all-time highs this year. So, I mean, I like the comparison here between like the US and the Canadian companies, because in the Canadian world, things are a little bit more challenging because you're trying to pick these kind of growth companies, whereas, like, you know, it's kind of easy to understand Chipotle. Like, come on. It's kind of easy to understand Microsoft. We've all heard of AMD before. We know, like, credit cards like Visa companies, which have been performing insanely well. So, I mean, it's not, like, that big of a deal, right? In Canada here, you can't just go out and find yourself a Microsoft stock. Like, Shopify is risky. It's extreme growth. I mean, it's hard to know the volatility is going to continue. It doesn't pay dividends. None of these Canadian companies really pay too many dividends, right? Like, not even Air Canada. But here you've got like these really big companies like Microsoft that pay like a half decent dividend and an incredible growth rate on top of that. You have like these payment systems that also pay dividends like Visa does. This one doesn't pay a whole lot, but Visa and them pay like way better dividends than most of these Canadian companies with great growth. So I want to let you know that this video is now brought to you by my Patreon. If you guys want to become a sponsor of this show, I'm actually going to give you special shout out videos to help promote your channel or whatever you need promoting. So you can be like a private sponsor for like only 25 bucks. And if you want access to my trades, my accounts, and all the information as it happens, I will be putting it over there for any Patreon as well. I hope you guys enjoy this video. Stay cool, stay awesome. I look forward to chatting to you real soon.